Alright, check mic 212. Let me know. Let me know if you can hear me well. Just type 1 in the chat box. And by the way, I have my fan on because it's too hot outside. And if it makes too much noises, then just let me know. I will switch it off. But I'd rather not to, because otherwise I'm gonna die because of the weather today. So yeah, let's wait for a couple of minutes for the rest to join, and then we will start our today's topic, which is about the advantages of crypto trading bots and how you can easily automate your trading to achieve higher returns. So while we are waiting for the rest to join, tell me, where are you from? Let's get acquainted. Okay, nice. Sweden, India, Latvia. That's great. South Africa. Greetings, South Africa. All right, I think it's the right time to start. For those of you who don't know me, my name is Dmitry and I am the portfolio manager, trader, and together with Bitsgap we are working on the automated trading optimization to let you guys achieve higher returns, to hedge your trades, to protect your trades from the falling market. So all of the tips and clues today I will share with you. And if you are a newcomer and you don't know nothing about the automated trading and you've never launched the bot at Bitsgap platform, then in this case we can do this together today, and I will easily show you how to execute your first trade in just a matter of 30 seconds. So that's gonna be your first trade, absolutely risk-free. So let's begin. Here we go. Here is our today's agenda. As always, we will go through the optimal strategies and settings because we have some new updates to share with you, and that is why there are new optimal strategies to present. We have use cases and practical tips, as always, and demo trading for you to discover your own strategies and to test optimal settings for automated trading bots. Demo trading is about risk-free trading simulation where you have virtual money and you can trade in any way you want, just to find what is your best suitable for you trading style. I will also cover risk management principles that we have in automated trading. I will explain to you what backtesting is all about. That's our feature, quite unique, and we've implemented it in a way that you are able to use it to generate trade ideas. I will also show you some profit maximization techniques depending on the market conditions. I will introduce to you the SBot and Scalper today. These are our, I'm not, how to say, it's not right to say that they are quite new, but they are relatively new. So it's been 2 months, I guess, since the launch, and we are about to unite the SBot and the Scalper, so you will have a brand new one in coming days. So we will talk about how to launch the SBot and the scalper, what are the differences and what makes them so unique, and what are the market conditions which are mostly optimal to use to launch these bots. Loss minimization on the downtrend, so that's what I've mentioned, hedging against the falling market. And for those who still don't know what the investment change is all about and what makes it different from the bot profit, I will explain this. So for newcomers, there will be a bunch of information useful, easy to understand, so don't worry. Today you will be able, if you haven't yet launched the bot, you will be able today, first time, to launch the bot easily. And yeah, so first of all, what is the high frequency trading, which is the main algorithm implemented in all of our bots? So high frequency trading, I guess it is already pretty much clear what this stands for. So this stands for high speed of trades execution. So we have this algorithm which is able to execute trades to find, it is able to find opportunities on the market to buy low and sell high, and at an astronomical speed. So for instance, here you have a graph, and that's the performance of the scalper. In this case, it's Zilliqa trading to USDT, and here you can see that it was launched with the scalper bot, and only 5 days passed, almost 6 actually, and within this period of 6 days we had in total 6,600 trades. Can you imagine that amount? Can you imagine manually executing that amount of trades? I doubt so. So if we take 6 days and divide it by the total amount of trade executions, we get 46 trades per hour, 24/7. So I doubt that manually any of us, even those that are quite professional traders, coming from not only from the cryptocurrency markets but from the traditional markets like stocks, ETFs trading, options trading, warrants trading, 46 trades per hour. That's a lot. And there are also, depending on the market conditions and the volatility of a given cryptocurrency, trades per hour, they vary significantly. So below you can see some other bots that we have. Here we have the SBot, and let me come back. So for 7 days we had 1,200 trades, so that's 7 trades per hour. And yeah, that's because of the market volatility and because of the settings that we have. It works like this. So each time the bot spots the opportunity to buy low and then almost instantly to sell high, it grabs this opportunity. It seizes this opportunity to make profits for you, regardless of the market direction. As simple as that. So here we have falling market, but even on the falling market, the bot is able to find these cases where it can buy low and then sell high. And these profits, you see that there are quite many trades here, and these profits, they all together, when we sum it up, we get pretty much decent returns, which if annualized, they can reach up to 300% per year. So let me show you some examples. But before I show you examples, let's first of all discuss what the algorithm, what is the logic behind our bots. So we have implemented this algorithm, which is called grid mechanism. And the idea is that we have a trading range, which is defined by the upper limit price right here and the lower limit price. So the trading range is the range that's the area, that's the zone where all of our trades, I mean, this is the area where the bot is gonna trade for us. And here we have the sell zone, which is represented by the sell orders, and we have the buy zone, which is represented by buy limit orders in this case. And that's, for the sake of the example, we have Cardano trading to USDT, and the total investment is only 228 USDT. And here below we can see the split. So we can see that a portion, so that's pretty much almost a half of our total investment, 112 USDT, is distributed by the buy limit orders. So that means that if the price starts falling, it will execute buy limit orders each time the price triggers buy limit order. And we also have sell orders, and you see that we have 2,255 Cardanas proportionately distributed by all of these sell orders here. So that means that each time, starting from that point, starting from the point of our bot's inception where we launched it, we already have all of these sell orders set above the price. And if the price starts moving from that point upwards, each time it initiates, I mean, it triggers the it reaches the price of the sell order, the bot will execute trades. As simple as that. So here's the trading range, and for the sake of the example, let's use only 8 grid levels. So grid levels, what are the grid levels? Grid levels are simply limit orders. So here we have 8 grid levels. So that means it can be, like in this example, we have 4 sell limit orders and 4 buy limit orders. So in total we have 8 grid levels. All right. It can be in other way around. So it can be, let's say, only 7 sell orders, and it can be only 1 buy order. That depends on the market conditions. So here we see that the price started to move downwards, and it triggered the first buy limit order. And as it triggered the first buy limit order, the bot will automatically place new sell limit order right above the price, maintaining the grid spacing. So the grid spacing is another term for you, which you have to understand in order to become successful at automated trading. Grid spacing is basically the space between our limit orders. And each time the price approaches certain levels, like here, for example, you see that the price approached our newly set sell limit order. So that means that the bot will now execute the sell limit order. So it's gonna sell Binance coin in this case to Ethereum. So we will cash out in Ethereum, and then this Ethereum will be used again, a portion of it, to place a new buy limit order. So that's the idea. As long as the price stays within the trading range, this algorithm, this approach will sustain. So each time the bot spots buy and sell opportunities, and each time the price, in this case, triggers the levels that the bot has set, it will trade for us and generate profits like this. There are different variations of how you can set the bot. You can only have, let's say, the sell side without any buy zone like this. But before we jump into this, let me show you another example. And now we go to the Bitsgap page. So here we simply click on bots, and now we are on the main page of automated trading. Notice that I have my demo mode on, so that means I'm now trading using my virtual money. This is basically a risk-free trading simulator, and it by 100% mimics the trades that you would otherwise initiate on your real account. So that's the perfect mode for you to test, to learn before trading on your real account. So you can actually start trading already now with me. And here we have a chart as usual, which you can zoom out and zoom in any way you want. And below we have a list of all of our active bots. So you see I have a bunch of them right now. And here we also have the history, so we can always check the past results. What is interesting, the cool thing here is that we have on the right side strategies. And the first that pops out is recommended strategies. These are all of the cryptocurrency pairs that are currently based on the backtesting results, based on the monthly, as you can see here, based on monthly performance. We have top cryptocurrencies which offer to us best returns based on past results. And you can use these recommended strategies as a source of trade ideas. And for the scalper, we have this list of cryptocurrencies. If I switch to other bots, we have Classic and the S bot. Let's see what's gonna happen. So we can clearly see that the list of recommended strategies, it changed, because for this particular strategy, S bot, we offer different strategies based on, once again, backtest results and risk to return ratio. Same with the Classic bot if you switch to the Classic bot, but I'm not gonna waste time showing you once again how to get recommended strategies. You get the idea. That's pretty straightforward and simple. And on the right side, the right panel, we have here is sample. So that's the simple setup of the bot. And here you can see that as I switched, let's say I'm gonna choose mana trading to BTC. And as I switch mana trading to BTC, I have my trading range automatically set by the Beatsgap algorithm. But if you don't like this, you can always adjust it like this. You can grab the upper limit price and you can grab the lower limit price, and you can squeeze the trading range, or you can make it wider. You can make only the sell zone wider, and you can make the buy zone narrow. So it's up to you. You can also do this manually, but to be honest, from my point of view, from the point of time management, it is better to optimize your trading range using the chart. Because otherwise, if you will manually try to set the price, you see, I already got confused, there are too many zeros here, alright? So I'd rather stick to the initial plan, where I can adjust the upper limit price and the lower limit price. So here I have also an option to change the exchange, and here, as I'm trading my demo mode, I have a list of exchanges with virtual money, and I can switch to, let's say, XMO. I'm trading on XMO, as simple as that. If for some reason, or for instance, we don't have the cryptocurrency that you want to trade in recommended strategies, then you can always find this cryptocurrency pair in this section, which is called pair. So let's say I'm looking for algo trading to XM. Yeah, so here we go. All right, as simple as that. And below we also have on the right side the balance. So here you can always check your current balance, and if I switch to my most active one, which is Binance, I have here a list of my available cryptocurrencies, and I also have specification regarding what is the amount of my balance is currently allocated to my active bot. So I have almost 7,000 USD currently allocated to all of my active bots, and only 700 is now available. And comparing with the advanced section, in the advanced section, the only difference here is that you have the investment specification. So when you set the investment value, you can set it by manually. Let's say I want only 2 BNBs, or you can do this by choosing the right percentage, let's say 85, and it takes 85% of your currently available BNB from your balance, from this amount. And let's say I want to launch this bot. Let's adjust the trading range. So here we see that the grid spacing looks like too wide. It's almost 5% spacing. That's too much. Let's reduce this, because the more grid levels we have, the more opportunities for the bot we provide to let it seize as many market swings as possible, as many opportunities to buy low and sell high. As simple as that. That's pretty much clear that the more of the levels you have distributed within the trading range, the more chances you have to have as many triggered, as the market is gonna be volatile. And the interesting thing here is that we have some limitations. So for instance, for the S bot and for the classic bot, the minimum grid spacing is 0.1%. All right, but before, like 3 months ago, it was twice higher, so it was 0.2. So that's something that we've reduced, because we now are able to execute trades having only 0.10% of the grid spacing. And for the scalper, it's even lower. It can be down to 0.02%. All right. And so here we go. Let's say I want to launch the bot with only 70 of the grid levels, which is pretty much a decent amount of grid levels. And you can set it up to 180, and some cryptocurrencies, they offer even 200. Yeah, but here we see that the limitation is 180. That's because of the technical specifications of the exchange Binance, because they have some limitations regarding the amount of how many limit trades you can set per the cryptocurrency. So here it's 180. And in this case, the more grid levels, the narrow is the grid spacing, respectively. But notice that I don't have enough to launch the bot, and the system is telling me that to start it, you must have at least 15 BNBs, or if you don't have that amount of BNB, and I actually don't have that amount of BNB, I only have 3.6, so I'm gonna click on adjust, and instead of 87 grid levels, I now have only 17. All right, but now I'm able to launch the bot. If I don't like this kind of setup, I can switch to other exchange if I have it linked to the Bitsgap platform, and it can be that the same cryptocurrency pair can be launched with different settings, just because each cryptocurrency exchange has its own unique technical aspects. So for instance, for BNB, for Binance, if you want to trade, let's say, BNB USDT, the minimum trade size, the order size is 10 USD. So that's the minimum. Other cryptocurrency exchanges, they can have a higher minimum requirements, or they can have lower minimum requirements. So that varies with the exchange. And yeah, I will show you later how these varies with exchanges. But for now, let's start let's initiate using the simple. No, actually, let's use the advanced. That's the most optimal one to launch our first bot. So let's now just click on any of the recommended, but let's first check what is the available balance. Maybe I should take out some of the investment. Maybe I should yeah, I gonna close my Neo trading to BTC just to get my 0.1 BTC back. So when I click on close, it is asking me if I want to sell left Neo to BTC at market price, because there are still some trades open. And here we go. So we have currently in this cryptocurrency pair, in this trading bot, we have 66 Neo in open orders, and we have 0.02 BTC in also open orders. So if I click on close and click on yes, check the box, sell all of the Neo to BTC, that's gonna be a full exit to BTC. So you see, you cancel the bot. And now let's refresh the balance. Yeah, you see that it placed market sell and it filled the market sell. So now let's check once again the balance. Sometimes it can take several seconds to refresh, but in my case I'm just having some internet connection issues. That is why it's not. Actually, yeah, it has refreshed, because the cryptocurrency pair that I've just closed, it's from the OKEX exchange. So yeah, everything is good. Let's now switch to OKEX and let's check the balance. Yeah, so here we go. Here's our balance, and let's initiate the bot using recommended strategy. So let it be icon trading to BTC. And let's increase the price range, and let's set the investment 0.2. Here I have some options: take profit, stop loss, and trading up. Well, the take profit, I will explain what is this all about in 5 minutes. The stop loss, it's pretty much simple to understand. I guess all of you are familiar with what this is all about. So let's say the price moves in the downward direction, so the price is gonna fall, and as it breaches the lower limit price, it goes lower the trading range. It can eventually trigger the stop loss, and if it will trigger the stop loss, in this case it will automatically sell all of the base currency, in this case icon, to BTC. So that's our basic risk management principle, basic risk management instrument that we have here, which you can also adjust on the chart, or you can manually set. The trading up I will also explain to you in maybe in 8 minutes, because I have this in my presentation. But let's just initiate the bot having simple settings. So here we go. The total amount of the investment is going to be 1,800 USD, and 2,500 of icons is required to initiate the bot, and that amount of BTC is required to initiate the bot. Let's see if I have that amount of icon on my balance. No, I don't have that amount of icon. So that means if I click on start, the system will tell me that you have to buy that amount of icon, and it's gonna buy for me using market price to launch the bot. I'm gonna go yes. So now let's see what happens. So here we go. Let's click on now the view button and see how many open orders that we have. So we have 97 open orders. That's exactly the amount of grid levels that we set. And here we have the buy side and we have the sell side. Yeah. And here we have the proportionate distribution by the price. So the lower the price, you see, the higher is the amount to buy. The higher is the price, the lower is the amount to buy. And if we multiply that amount, in this case icons, to price, which is now in BTC, we're gonna get the same investment allocation as if we would multiply 60 by that price, and then again 75 by that price. So that's equal distribution implemented in the SBOT strategy. So here we go, and we already have our first trade initiated, as you can see clearly on the chart right here. So that was the execution of our buy limit order, and we can check it once again if we click on view and have it in the completed orders here. So notice that we don't have any profits yet generated because we only initiated the first buy limit order and we paid the fee. So that's why our current profit is negative, because we've just paid the fee. And if I, let's say, let's open my Bitcoin Cash to USDT. So here we have fees. They are priced in. So each time you see the bot profit, you have to keep in mind that it is absolutely net of all fees. So it deducts, like profits, they deducted from the fee. Sorry, fees are deducted from our profits, and that is how we get our pure profit, our net profit. So that's another feature that we have at Bitsgap, comparing with other platforms. We provide you with only transparent performance metrics. So you see here 8.65 USDT. So that's total profit generated by the bot, net of all fees. So you don't have to on your own calculate how many fees you've paid, because we have already calculated this for you, and it's taken into calculation. As simple as that. Now let's come back to the presentation. So yeah, let's say if we want to initiate the bot having only having only the sell side. So in this case, like this. So in this case, if as soon as the price triggers the sell limit, it's gonna place the buy limit order right below, maintaining the grid spacing. You see? If it again then goes upwards and triggers other sell limit orders, in this case, each time it triggers the sell limit, it's gonna place below buy limit order. And if the price stays within the trading range, it's gonna trade almost endlessly, unless it goes beyond or it breaks the lower limit price. The main question is, what is the difference between the investment change and basically what makes up this investment change, and what makes it different from the bot profit, and how they are calculated. So here we have the example with BNB trading to USDT with the total investment of 445 USDT. So we see that the investment change is in the negative zone. It's minus 0.7%. So that means that our current value is lower than the investment that we had. So that's around, I guess, 440 USDT if we recalculate our current value of the investment. But here's the thing. The investment change is composed of, basically it's the value of our current open trades. So we have here right now 15.68 BNBs in open orders, and we have some USDTs which are distributed by the buy limit orders. All right. So to calculate in this case the current investment value and to compare it with the initial investment value, which is 445, all we have to do here is to simply multiply 15.68 BNBs in our open orders by the current price, and it was at that time 0.08, and then sum it up with the USDT, and then add the bot profit. All right, so the bot profit is already priced in. It's the added value of the investment change, so that's already priced in. So I'm gonna show you now how you can get this idea even better. Let's go and continue with the optimal strategies. So yeah, let's see the investment change of any. Let's choose. Okay, let it be falling active bot. Let's use icon trading to USDT. And all we need here is the chart. No, actually, let's use another one to better get a visualization of the effect of the investment change. Let's use quantum to USDT. So notice that we have minus almost 5% of the investment change, but the broad profit is positive. All right, well, it will always be positive in any case, because the bot makes profits for us regardless of the market direction, because its idea is to buy low and sell high, and we constantly get these opportunities regardless of the market direction. So let's find the point of inception. So that was the point of inception, all right? And now is the current price here. Let's see what would be the investment change if we would simply hodl, if we wouldn't use any of the automated trading strategies and we would simply hodl. Actually, I had this example in my presentation, so let me just show you this. Yeah, I have to skip this one, and we will come back to this a little bit later. Yeah, it takes time because of the animation effects. So yeah, here we go. Not the exact one, but I guess the next one. Yeah, so here we go. That's quantum trading to USDT. So if you would simply buy this cryptocurrency and then do nothing about it, you would just simply hodl it, as we call it, then in this case, down to current price, your total investment change would be minus 6.88%. So that's the price change from the point of inception down to the current price. That's minus 6.88%. But having automated trading on, and that means that you let the bot to use the base currency, in this case quantum, to generate profits for you in USDT. Notice that within this period there have been 600 trades in total, and that allowed the bot to generate 23 USDT, so that's 2% to our investment. And because of this added value that the bot has generated during this falling market, this profit offsets the investment change, and that is why using automated trading we only have minus 3%, whereas if we wouldn't use the automated trading, in this case our loss would be twice bigger. It would be minus 6.88%. So that's what we call hedging. That's what we call loss minimization, because we have the bot profit which offsets the negative value change in this case. So that's the idea of what makes up the investment change and how it is used with the bot profit. Now let's see what are the optimal market scenarios to launch the bot. So despite the fact that the bot makes profits for us regardless of the market direction, either it's moving upwards, sideways, or it is a falling market, it will constantly find opportunities on the market to buy low and sell high. But to achieve profit maximization, to achieve the best results you can actually get from the market, are only on the sideways and, as here in the example, the uptrend market. So not only we are affected by the price appreciation of our base currency, in this case BNB, we can clearly see that the price of BNB in Ethereum is growing here. So that means that the BNB that we have in our balance right now, as the bot is constantly buying it and then looks for sell opportunities, so that means that in any case we will be affected by the price appreciation as the market is moving upwards. But here's the idea: not only we are affected by the price appreciation, but the bot generates profits for us. It buys low and sells high, buys low, and then again it sells high. As simple as that. So that's what we call active investment change, because that's the profit maximization. We let the bot to use our BNB to generate profits in Ethereum. And now imagine that at that time, as BNB was growing, imagine that Ethereum was also growing to, let's say, to USD, Ethereum to USD. So the profit generated here, which was in this case in Ethereum, is gonna also positively affect our balance, as we now have Ethereum that we've earned as we were buying low and selling high BNB. And if the price of Ethereum to USD has grown during that period of time as well, so that's gonna be the added appreciation of our portfolio. And on the sideways market, I would say that sideways market is probably the best optimal market scenario to launch the bot, because the idea here is to earn during the stagnation. And the sideways market is basically a neutral market. It's when the price is neither goes upwards nor it goes downwards. So it's more or less stays somewhere in between. And we don't want to waste that time, all right? So using automated trading, we are able to generate profits during the stagnation, during the sideways market, in Ethereum in this case. And now I'm going to show you the effect of the profit maximization on the sideways using automated trading and comparing it with simple hodling. So if you would simply buy BNB at that point, at that price, and then you would wait until current price, your investment change, your profit would only be 10.57%. All right. But as we have automated trading strategy on, in this case SBot, it has managed to generate added value in 16%, which is in this case $8. And that added value goes to the investment change, and we have our investment change higher. So we have it almost by 5% higher. So that's 15.84, comparing with simple hodling strategy that would generate for us only 10%. So I guess the choice is pretty clear here. Automated trading allows us to maximize our profits, and here is the perfect example of how automated trading can maximize our returns. 15% against 10%. Here's another example of Bitcoin Cash to USDT. It's, I guess, the most recent one that I've made. Again, so here you see that the point of inception, current price, if you would simply hodl, it would be only 5% to your balance. But as we had our automated strategy on, we allowed the bot to generate profits for us in USDT. That's going to be an added value, and that is how we get our 14%. Compare 14% with 5%, yeah, that's 9% difference. So that's the idea. Here, pretty much the same, but we have a falling market here. Point of inception, if you would simply hodl, you would have -4%. With automated trading, here comes the automation effect, here comes the hedging effect, and it's only -2%. So the profit that's generated during this period, it offsets the negative value change. So instead of having -4%, we have only -2%. So no matter in which direction the market goes, advantages of automated trading, advantages of consistent profit generation are obvious, all right? And with features like trading up, we can always, almost always, stay in the market without the necessity of staying in front of the computer 24/7, all right? So what is the trading up function on? We've learned that we have the trading range, which is defined by the lower limit and upper limit, right? And we also learned that as the price stays within the trading range, the bot will trade for us. But if the price moves higher, it breaches the upper limit price, or it breaches the lower limit price. In this case, unless we have our trading up function on, the bot will not trade for us. But here we have our trading function on, and that means that the trading range will follow the price appreciation like this. So you see that now our upper limit price is higher. It moved upwards from that point up to this one, so up to the higher high of the last price action. And now we have our trading range higher. Let's assume that then the price again moves upwards and it establishes new higher high. In this case, what's going to happen? Yes, exactly. Upper limit together with the lower limit price, which define the trading range, they will move upwards. And now the trading range is above. But what happens if the price from that point, from the point of our newly established higher high, goes downwards and it breaches the lower limit price? In this case, the trading range will not be cautious here. So it will not follow the price depreciation. So that means that as it breached the lower limit price, there will be no action in this area. So the bot will not trade for us in this case. But as the price then again comes back, it has retested, it has bounced off this level, and now it again moved upwards and has entered again the trading range. Here is the zone where our bot will start trading again. All right. And if the price then again moves upwards, in this case, what's going to happen is that our trading range will follow the price appreciation. So that's the idea of trading up. All right, it allows us to stay in the market, and basically now the best way to describe trading up is by saying that it allows us to follow the upside momentum. It allows us to follow the appreciation. All right. So you don't have to manually close the bot, all right? Having trailing up function on, you allow the bot automatically to follow the price appreciation. So here's the example, NG to trading to BTC. We have 54 grid levels, amount of investment 0.013, the SBOT strategy, and we have the trading up function on. So here we go. These are our initial, here's the initial upper limit price, which is 1637, and our lower limit price, which is 1402. So as I have my trading up function on, notice that after the price has breached the upper limit price at that level, my trading range started to follow the price and is now right here. So here's my trading range now. Notice what is the difference. If we otherwise wouldn't use the trading up function on, we would get stuck here and we would miss this price action. But as I have my trading up function on, I let my bot to follow the price appreciation, and here you see that it has managed to seize almost every market swing possible here. You see how many trades? That's 12,000 trades executed here. Without trading up, I would have, I guess, maybe only 1,000 trades, but with trading up, I have a profit maximization of 17%, which is an added value. Here's another example. In this case, we don't have our trading up function on. And here what we see is that without trading up function on, we got stuck at that level, at this area, and we skipped this price appreciation. So if we would have our trailing up function on, we would see on the chart trades here, but we don't have them because we got stuck as we didn't have our trading up function on. So always take into thorough consideration whether or not you are willing to switch the trading up function on. If you want to follow the price appreciation, all right, then you should consider using trading up function. But if you prefer each time the price breaches the upper limit price, you prefer to manually close the bot and then later to find better opportunities on the market to use your cash, to use your investment, then in this case the optimal way for you is not to use trading up function. If you want to have more manual control over your automated trading, that will be the case. Here comes the another topic of ours today, webcast, is sources of trade ideas. So you've already seen that we have recommended strategies, but we also have backtesting. So what backtesting is all about? Let me demonstrate this to you. So all I need to do here is, okay, I have quantum to USDT, and below in the advanced section I have show backtesting results. Okay, for some reason my screen is not responding, so I need to refresh the page. As it refreshes the page, tell me, by the way, how many of you are already using Bitsgap automated trading bots with trading up functions on. So let's see how many of you are already familiar with this profit maximization technique. Yeah, so you see it takes some time because I'm using my MacBook 2017 and I guess not enough computation power to handle so many softwares, so sorry for that. Anyway, here we go, and we click on the show backtesting results. In this case it's icon trading to BTC, and automatically it defines a monthly period, so from the 19th of May up to today's day, so that's 18th of June, and during that period, for a period of only 30 days, it has managed to generate 10.61%. So that's the bot profit, all right? We don't take into account the investment change of, we don't take into account the value change of the base currency icon. Here we only take into account the bot profit, all right? So for that period, it would have generated 10.61%. And we can see at which price it would sell and buy in the completed orders. All right. If we want to have another date range, let's say we are interested in what would be the profit generated by the bot if we would have initiated the bot, let's say the 3rd of let's say the 4th of June until today, and let's see what would be the profit. So in this case, as the market was falling, the bot would have only generated 1.28% for that period, for the period of 15 days. And yeah, so what backtesting is all about? It takes historic data to simulate, to backtest. That is why it's called back, but it's why it's called test. So it tests historic data. It tests previous days, and it estimates what would be the profits if we would have initiated the bot back at that time. So how we can use the backtesting to generate trade ideas? Here's the example: NG trading to BTC. Starting from the 11th of April until the 11th of May, so that's 1 month period, we see that the price has reached the higher high of 66%. So from the point of 11th June up to the highest price, 66% appreciation. And then from that point down to the lowest, it was minus 35%. So in this case, this is the downside risk for us. But for that period of 1 month, the bot would have generated 34% in BTC in this case. So during that period, each time the price moves downwards, it would buy, and then it moves upwards, it would sell. So each time it spots opportunity on the market, it would grab this opportunity to make profits, and in total it would make plus 34%. And now in another example, same period, but in this case it's BNB trading to BUSD. The biggest growth, 35% up to that point of higher high, and then the downside risk from the highest high to the lowest, minus 23%. Now we take this data, all right? In this case, I have a table, but in reality, you can only use the backtesting that we have here. So you don't have to use this table. You can visually spot the difference. So here's the difference. The bot profit for NG 34, and for BNB it is lower by 21%. So here, definitely the outperformer is NG in bot profit, all right? But in terms of the downside risk, the NG was riskier than BNB by almost 11%, all right? So if you are a risk taker and you are looking for maximized returns, in this case, NG could be an option for you. But if you are looking for, more conservative results, then in this case, BNB could be an option for you because it had a lower risk, but it also had a lower bot profit. So when you use backtesting, you can find best suitable cryptocurrency pairs for your trading style. If you are a risk taker, then you are looking for those cryptocurrencies that have a higher volatility and have higher returns for a given period of time in bot profit. But if you are risk averse and you are quite conservative when it comes to risk, then you are looking for those that offer lower returns, but as a price of that, it has a lower risk. All right, so here's how you can use backtesting. And now, as we have learned quite many things, here comes the trading guide, which I would suggest you to follow. So first of all you have to do is to choose the ticker. And you can choose the ticker, once again, based on what? Backtesting, which allows you to generate trade ideas, or you can use recommended strategies like here. All right. Right after you've chosen the ticker, make sure that you choose the right bot. So if you are looking for high efficiency bot which generates maximized returns within the investment limit. And to learn more about what this is all about, just click on read more, and you will find more information about the technical aspects of the SBot. Some key features like how it distributes your investments, how it stays within the investment limit, and how it secures your trading. And yeah, if you want to have more grid levels and you want to have a narrow setup, then in this case scalper can be an option for you. Right now the trading range is predefined, so you are not able to readjust it. All right, but very soon we are uniting scalper with the SBot, so that means that the new bot will allow you to use scalper settings within such a narrow setup. So here is the grid spacing is 0.02%. So you will be able to adjust these settings. And in 5 minutes, I will show you some optimal strategies for such a narrow setup. So after you've chosen the bot, you have to define the grid levels. And as I shown you here, your grid level, like grid amount, depends on the available balance. So the more of the grid levels you want to have, the more investment you must allocate. All right. So make sure that you have enough on your balance and that you are able to proportionately distribute, to allocate your investments. Make sure that you use basic risk management principles like stop loss to secure your portfolio, to secure your trades in case of the severely falling market. Make sure that you have a take profit if you want to achieve concrete investment change results. So let's say you want your investment change to be to reach 1%. So if I would switch my if I would use take profit here, this one, and if I would set 1%, and let's assume that I had this set up for my BTT trading to USDT, so as it reached 1%, it would have closed my bot already. But I don't have my take profit here at BTT, so it has moved even higher. It's now 1.05%. But if I had my take profit on in BTT, in this active bot, the bot would already close it automatically and it would lock in the profit. And yeah, final step is to monitor the activity of your trading bot. It doesn't mean that you have to stay 24/7 in front of your computer. No, you should spend, from my experience, I take no more than 40 minutes per week. So approximately I check my trading bot's activity 4 times a week. And if I need to make some adjustments, it takes like 5 minutes, something like that. And yeah, I don't take into account the market analysis here, but if we take the market analysis here, yes, it would be a bigger amount of time spent. But in general, to initiate the bots, to monitor them, you don't have to spend much time. You only have to spend very, very limited amount of time. Because everything is fully automated and there is no need to constantly monitor the market. The bots, they simply follow the rules, and yeah, you have all of the features to achieve maximized returns. So here's the composition, what our bots are composed of. You see that grid amount varies from 10 to 108 levels, but in case of scalper it's 200 automatically. Grid spacing here in scalper it's minimum, yeah, it's actually 0.1%. So soon the SBot will be united with the scalper, so that means that we will have 0.01% and we will be able to adjust our trading range in any way we want. So key differences, they are here right below. Investment restrictions, they vary, and investment distribution, they also vary. So the way these bots distribute your investment is different. And I've shown you example with the SBot where we had the lower price, the more amount to buy, like here. Let's use this one, SBot view, open orders. So as I said, if you multiply 670 by that price, you will get the same investment allocation amount as if you would multiply 673 coins by that price. But in case of the classic bot and the scalper, they have a different approach. So here we go, the classic bot, open orders. Notice that we have this same amount regardless of the price, regardless of how much. I mean, if you multiply that amount by that price, you will get, in this case it's gonna be, yeah, you will get a lower investment allocation than comparing with this one. Same applies to here. You see, different price but the same amount allocation. So here in this case, equal distribution is only in terms of the amount, whereas the investment allocation is different. And in SBot we have proportionate investment allocation, in a way that you have equal investment buyouts from the market. So yeah, mainly technical differences. Here are some of the examples of, in this case, the SBot with trading up function on, added value 6%, total investment change 14%. Yeah, just some examples. Here we go, here we go. Yeah, as I said, the idea that we follow at Bitsgap is to automate and to allow you to maximize your returns. So we are constantly developing and looking for optimal strategies, optimal technical solutions and settings for the bot to let you grab as many market swings as possible and to profit on it. Also, we have these hedging things which allow you on the falling market to offset the negative value change. So everything is implemented and it's here for you. You can use it, and with demo trading mode you can use and you can test all of the features that we have, all of the things that I've just mentioned, absolutely risk-free. Secure trading, yes, in SBot we have this optimization. So here's the thing, on the left side is the chart of GRS trading to Ethereum without optimization, without as I call it, yeah, secure trading. So here, without this optimization, you see the pump here, and in this case the bot, the one without the optimization, it would have quite a lot of buy limit orders executed at the very highest price, and you can see here a consequent drop down, and in this case the crypto that you bought here, in this case GRS, it would significantly depreciate. But with the optimization that we have at Beatsgap, we allow our bots to avoid such extreme pump and dump scenarios on the market. So in this case, you would have a smooth return. You wouldn't be affected by this unfortunate and yeah, you wouldn't get exposed to this market volatility here. You wouldn't get stuck with your buy limit orders at the very highest price. In this case, you wouldn't get affected as here by the negative value change, as then the price again moved downwards. Here with optimization, we simply basically we send the bot signal to avoid such pumps and dumps when it spots it. We have some internal algorithms to spot these pump and dump scenarios on the market to avoid them. So with this feature, we secure your profits. Yeah, regarding the scalper bot, you will be able, as soon as we unite the S-bot with the scalper, you will be able to launch it on stable coins. So that's what I call stable strategy. So that means that you will be able to profit on this arbitrage market. So you know that there are quite many stable coins like USDT, TUSD, BUSD, all right, USDC, quite many, TUSD, and yeah, USDT. So the idea of stable coins is to be equal to $1, right? But in reality, it's not always the case, and as the market is still quite immature and inefficient, we have these arbitrage opportunities when some stable coins, they are trading lower or higher to other stable coins. So that means we have an almost endless sideways market. So that means we have an endless arbitrage opportunities. Well, until the moment then the cryptocurrency market matures, but I guess it will happen only in maybe 4 years. So I bet that we have 4 years in our pocket to profit on this passive strategy. So with the scalper setup, which has grid spacing reduced to 0.01%, we will be able to seize these tiny market swings, and that means that we will be able to profit on it. That's almost risk-free strategy. So that's something that I would say one of the coolest things that we are about to offer you guys is to have this risk-free, almost risk-free passive strategy. So as soon as we will launch it, I will initiate the bot, and during the next webcast I will show you the results. As of now, we've covered pretty much everything. So if you have any questions, let me answer. Yeah, there are some questions about the stop loss with the trading up function. So let's come back to the presentation. Exit. Yeah, it takes time. So remember, I shown you that when it comes to trading up, the trading range is gonna follow the price. Same with the stop loss. When we have the trading up function on, it will also follow the price appreciation. So it's pretty much like the lower limit price following the price appreciation. So let's say we have stop loss and trading up function on. So in this case, our stop loss would be here, well, approximately. And as the price moves upwards and the trading range is following the price appreciation, the stop loss is also automatically following the trading range. So it's gonna always stay where the lower limit is at that point. So here you see that the lower limit price is right now over here. So that means that from that point, this, oh my god, what is happening here? So from that point where we had our stop loss initially, it will follow the price appreciation together with the trading range, and it will be right here. So our risk management instrument is always with us. It is following us, and it will not allow the bot to lose the profits that we've generated. That's the idea. So if you want to read more about the optimal strategies, and if you want to learn more about what makes our bots different technically from each other, then just simply go to the main Bitsgap page and open the blog section where we have everything about automated trading. So we have some articles with use cases, and we have technical articles to explain what makes our bots different from each other in terms of investment distribution. We also have a knowledge base if you want to learn more about trading. But yeah, basically everything unique, and all of the main features that we have I've covered today. And if you have some questions unanswered, then please use our support button, which should pop up here, or you can ask the question in the Telegram chat that we have, or the third option is to ask the question during the next webinar. As simple as that. So either I or Erwin from Bitsgap will answer your question. So we are here to provide you with these unique market opportunities, with these unique instruments to seize market momentum to generate maximized profits. Maybe I should show you some examples of my current trades, but these are mainly the trades that I initiated during the previous webinar just for the sake of the example. So I only have a few here that I've initiated based on my market analysis. So that was, yeah, at that time it was Bitcoin Cash trading to USDT. So in my case, I'm looking for the cases on the market when the price respects the support level. So when I see that the price bounces off the support level, either it's the horizontal support level or it's the line support level, the sideways support level, each time I see the price each time I see the price respects the support level and it bounces off it and demonstrates some appreciation, then I enter the trade, and this allows me to generate profits. But sometimes I'm also can be wrong, and in this case, when the market is falling and I was wrong about the prediction, in any case the bot will offset the negative value change with the bot profit. So those examples that you've saw today, these are my real trades. Alright, so for instance here Zilliqa trading to USDT, so I've spotted an upside momentum, strong bullish momentum, and I've decided to launch the scalper because I knew that Zilliqa is quite volatile, and as it has a fractionate price, so that's, which is, I mean, it's below 0.00, so that's very fractionate price. That means with the scalper I am able to seize as many market swings as possible having this narrow setup. And yeah, maybe I will show you another example. So yeah, here we go. That was Bitcoin Cash to USDT, and I've launched it at that time. So I've launched it right here because I saw a bounce of the support level. So, and I've noticed that it will most likely enter the sideways market. So that's exactly what happened. The price then again dropped down, bounced off, and it has reached the resistance level over here 2 times actually. Again downwards to the support, respected this support level, bounced off, and again. So that's why I'm still in this trade, because it is still in the sideways market and it's still generating profits. So yeah, to sum up, look for the sideways market formations to earn during the stagnation, and look for the upside momentum market. Right now, in my opinion, it's not clear whether the price of Bitcoin will move upwards or downwards. It kind of stays currently in the neutral zone. So I'd rather wait for some price action. Either it breaks the 10,000 or it breaks the 9,000. And in this case, in this case, the market paradigm will change, and depending on the future market conditions, we will see what are the optimal prices to enter the market. So attend our next webinars to generate trade ideas together, because sometimes I'm opening trades during the webcasts, and during the next week I show positive results, sometimes negative results. Yeah, just to show you how to learn. So for you, I would recommend to trade using the demo account before risking your real money, because in demo account you have a risk-free simulator, virtual money, which you can trade to find your best settings. Yeah, maybe you are good at cryptocurrency trading to BTC pairs. Maybe you are better at cryptocurrencies trading to stablecoins. All right. Maybe you are good at scalper strategy or the SBOT. So find out which strategy suits you the best. And I wish you all the best with that. And yeah, check our YouTube, subscribe, and see other webcasts that we had and some useful videos. Check the blog at Beatsgap to find out more about the automated trading. And yeah, thanks a lot for your attention. Thanks a lot for your time. I appreciate that. So see you next Thursday, and share your ideas with other members of our community, and leave your feedback, which allows us to improve the quality of our content. As of now, I would like to ask you to rate this webinar from the scale of 1 to 10. So I would be able